As you may know, it's a little rough right now finding deals, and we're solving this problem. The biggest issue isn't so much opportunity, it's really getting the debt right. And we saw this also when COVID hit, and it's literally overnight bridge lending went away. We relied on bridge lending because we have such a heavy value add component, and bridge loans allowed us to finance a part of that construction as well, which was great. When that went away, we had to use agency debt, and we were unable to finance the construction. Now, of course, that means that we have to raise more equity, which depresses the returns, which means pushes downward pressure on prices. And it's the same thing right now, okay? So bridge lending has gotten so expensive because we get floating rate debt. And the reason we do that is that it gives us a flexible exit. The problem with fixed rate debt is that if it's, say, a 10-year term and you want to sell or refinance after 2 or 3 years, the prepayment penalties are enormous, basically prevents you from exiting the deal if that's what you want to do. Floating rate debt, after 12 months, you pay 1% and you're out of it. The problem, of course, is the floating rate component of it. You can mitigate that by getting what's called an interest rate cap. 2 years ago, 18 months ago, that interest rate cap was $50,000, whatever. Now that same interest rate cap is $500,000. It's now at the point where it's just too expensive. And a lot of that is partly because interest rates have been going up, but also because the volatility and the speed with which it's doing that. It makes in the short term bridge lending really not a great option. So we are looking into other solutions to solve that. And once we do, we'll be able to pick up some deals right now like we did in COVID. And yes, this changes your underwriting, right? Because if you can't, for example, get financing for your loan, or you had to put 12 months of interest into escrow, which we did after COVID, well, that changes your underwriting. It puts actually a pressure on the price. You can't pay as much anymore. Okay, then you modify your underwriting and then you go forward with that. What's really key right now in this environment, guys, is you got to pay attention. You got to see what's going on right now. Where are the rents going right now? Don't look at old Yardi and CoStar reports that you got from your broker. No. Call your comps right now, drive them. What are they asking for right now? Are the rents moving up or moving down? Right? What's going on in the debt market right now? Talk to your loan officer. What's going on? What are the loan to value? How are things changing? And then be agile with your underwriting. If you're able to do that, you're going to be able to get some great deals right now, because there are more sellers than buyers right now, because a lot of people are just sitting back for a second going, hey, I don't know what's going on. I'm going to wait a minute. And for those who are astute and educated, this is going to be a fantastic opportunity to get into some deals.